there's often a break of trust with financial institutions, either in the West because of the financial crisis and some of the other kind of accounting irregularities and other things that have happened in the last decade. And in emerging markets, often people are pulsing in and out as a financial institution of serving customer bases. And so in our case, there's a more profound, in my belief, a more authentic relationship that a digital company that is particularly a platform and is there to conduct commerce can have than a financial institution can. And the purpose of the financial institution should largely be in the background to facilitate that commerce transaction that occurs.
We are active in a very rural setup, so really, really far out there. And basically all the MFIs and then banks, especially in East Africa, have been based, I mean, changes, but it have been based more on the urban areas, so they cater to the urban customers more than the rural ones. So it was even difficult to find somebody who is willing and interested in financing our customers. And secondly, it's affordability. So like with the brick and mortar approach, it's going to be very expensive to cater these customers. So you have interest rates 50-60%. It's really normal. It's not even that they make a lot of money on it. I think they even put money on top of it.
If I was to serve my customer's entire need, I need to put that credit on his plate. So it was more like a customer-driven experience, and we were forced to be driven into it because we saw that banking and financial institutions were not going the last mile, and they were not, because of their own challenges perhaps of not understanding how the collateral management is going to be done. So our bread and butter still remains the warehousing and the agri-reach program. But I think as we go forward, as I said, it's a congruence of tradition and modern getting together. And obviously finance becomes a part of it.
Typically the cost of credit for these people are very, very high. If they go to a consumer finance company, then their cost of credit on average is about 60% to 100% effective interest rate per year. And so, but this is kind of after a few years of rolling out the IK benefit program, now we have banks actually working with us, and now they plug into kind of the IK benefit platform and willing to issue credits directly into this set of factory worker and allow this factory worker to use that credit to purchase goods from us. So from that point of view, we're starting to be able to shift the burden of funding from like on-balance sheet funding to now off-balance sheet funding. Now the bank are now taking that action.
If you think about how a small business would typically invoice their customers, they would raise the invoice in the accounting system, print it out, put it in an envelope, post it off to the accounts payable department on the other side, and that would end up being a very long process. So with Xero, we changed that whole process to make it online. So your invoice is actually sent via an email, and you can see here that there's a Pay Now button that allows you to pay, that allows the customer to pay either via bank or credit card or PayPal.